What is going on, crypto peeps? Welcome back to the Traveling Crypto. A lot to get into today. Let us get right into it. Looking at the market cap, we are currently at 113.5 bill. The market is actually extremely involatile right now. If you look at BTC, the crazy thing is, look at how tight this range is on BTC. It is struggling to get above the 50-day moving average. This is on the one-day chart, obviously, but it is struggling to get above the 50-day moving average. So that is currently acting as resistance, forming this bear flag. But you can't have this bear flag, the flag portion of this bear flag. This can't go on for too long, right? Eventually, this is going to turn into, or might already be, something like either a sideways channel, depending on how many candles you use, or this could easily be turning into a symmetrical triangle, right? Either way, they're both continuation patterns coming off of a downtrend, and we're in this extremely tight range with declining volume. So logic just tells you that we are more likely to break to the downside. Now, I think eventually, especially if Bitcoin becomes the internet's currency or the world's #1 digital currency, that we will stop this fluctuation. If you look at something like gold prices, right? Even though gold is not considered a widely used currency, but it is a widely used store of value, there is a point at which it stops fluctuating like crazy. It does see steady inclines. Like if you go back and look at gold charts from 2003 to 2011, that 9-year run, you'll see that it has steadily increased, right? But in terms of this fluctuating movement, is Bitcoin gonna, break 3,000 and fall to 2,500 and then eventually become 20K by the end of the year? We might get to a point where that is no longer the case on Bitcoin. It really depends on, nobody can tell you the answer to that, right? It really depends on how it is perceived in the market. It could see a steady incline in the same way that the stock markets see, or the way that gold has seen. But gold has also had these years, decades-long periods of involatility and sideways trading, right? So who knows? Either way, Bitcoin currently, as it stands, is in this extremely tight range, which, as of recent, that has been dangerous territory for Bitcoin. Anytime it is squeezed in this tight range, and you can use something like the Bollinger Band to take a look at this, but anytime it is squeezed in this tight range, if no volume comes in, it tends to then see a violent downfall. And if it does so in this continuation pattern, then look to between 1,800 to 2,500 for the next range for Bitcoin. Either way, I'm hands off Bitcoin. There's no reason to swing trade it. Yes, if you hold some in cold storage or your dollar cost averaging, that's fine, but I'm not swing trading Bitcoin. Even if you tried to swing trade Bitcoin right now, there is no swing. So not only are you taking a huge risk because we don't know the future direction or the major direction it is heading in, but there is no swing, right? So speaking of swing trading, let's take a look at some alts that we made great profits on in the last few weeks. And I'll go over a couple of ones that we whiffed on as well. If you want access to the trade alerts, link is in the description. Looking at BTT, obviously this is the one, the Bittorrent Token. This is the one that everyone is talking about because it saw, 125% growth over the last couple days or so. And we entered BTT at the 16 sats range. And the reason I entered, not because, we're fortune tellers or I knew of any run up, but it was a pretty low risk trade, right? So there's this notion that coins have a propensity to decline as soon as they hit the exchange, or see a rally as soon as they hit the exchange. It really depends on the coin. We've seen both. We've seen the minute that a coin hits the exchange, you see this tanking, right? And we've seen a run up as soon as the coin hits the exchange, because there is no normalized pricing. So stuff like FOMO and panic selling kicks in right away. And don't forget, there are no fundamentals in crypto, right? So, it hit the market. There was obviously we're looking at the 1 hour chart because there is no history on Bittorrent Token. And, I said, if it breaks 16, I'll take a chance on it and set a really tight stop limit. Why not? It is a low cap coin. And by low cap, I don't only mean low market cap. I'm talking about the price. We're in the double-digit sats, right? So any move up is considerably significant, and you could set a low stop limit at 15 or 14 sats. So took a chance on it. Obviously, it's a managed risk because position sizing has a lot to do with your success as a trader. Entered a position, and it just did not stop rising, right? It went all the way up to around 37 or 38 sats. So almost 124% gain before, selling after this decline. Now, how far down is it going to decline? Well, the tool that you can use in order to deduce that or project that is the Fib retracement. So if you do a Fib retracement and you do swing low to swing high, you'll see the Fib levels going down, right? Your 0 is at the top, your 1 is at the bottom because it is headed down in this direction. And you'll see the 0.382 level is around 27 sats. The 0.5 level is around 24 sats. And the 0.618 level is 21 sats. So if I were to buy back in, I would look somewhere in this range. I know it is a wide range, but I would look somewhere in this range. And obviously you want to be zoomed in the 1 hour or the 15-minute chart to see what is going on. Now, the one thing that is surprising to me is that you don't see a lot of sell volume, right? Most of the green bars that have broken the 20 period moving average of the volume are green. And even with these tall red candles, you don't really see a ton of sell-offs. So that is an indication to me that this is just a slowdown and a typical retracement before a potential move up. Now, if we do see subsequent red candles and those are accompanied by insanely tall red volume bars, then, the story changes. But currently that is the story. Also pay attention to the momentum oscillators. These are here for a reason, right? Looking at divergences on something that's parabolically moving, it could be deceptive. So I'm not really looking for a divergence. I'm just looking for a slowdown in momentum. And you will see this reflected on the momentum indicators once we bounce off of some of these levels and we see a rally again. You'll see some of these curl upwards, and that along with other indicators could give you a signal to take a chance again. All right, looking at BNB, this is one that has done us real good over the long term. BNB continues to be a long-term token in my portfolio. Ever since November, it's had the steady incline. We've seen this before with BNB last year, but it's had the steady incline. And now we are up 40% on BNB. Again, if you want access to the trade alerts, link is in the description. And I'll pause here just real quick and say, if you're having trouble with your technical analysis and you'd like one-on-one coaching or some FaceTime with me, that link is also in the description. I have 3 slots open for the month of February. I only take up to 10 max in any given month. That way I can manage my time and your time more effectively. And I have 3 slots open for February. But you'll see here the 50-day crossed the 100 and the 200, and we are clearly trending up with great volume. BNB continues to be a long-term hold in my portfolio. Let us take a look at Litecoin real quick. I entered a swing trade on Litecoin. It is currently in the sideways channel going all the way back to the beginning of the month. This is on the 4-hour chart. I entered a swing trade on Litecoin as it continually bounces off of this support level here. So we entered a swing trade here, expecting it to run up to at least this resistance point, and that will give you a profit of around 12%. But now it is seeing the usual resistance at around, $34, $33.50. And you can see the volume is just terrible. So we do expect it to retrace, and I will look to play the swing again. Remember, trend is your friend until it isn't. As long as you protect your trades with stop limits, you can enter swing trades like this all day long. Here's a trade that actually didn't work out. A swing trade that didn't work out for us is Waves. We did make profit on Waves during this run up, but it was then forming a bull flag here. This is on the 1 day, and I entered a swing trade at the close above the resistance of this bull flag, right? This is a pretty sound play, but this goes to show that the market doesn't always play out the way you want. However, you can escape unscathed if you have your stop limit set up correctly. I had a -5% stop limit. This declined about 7%. If you take a measuring tool and you look at this, we are currently down about, a little more than that. Now it's around 10% since the close of the candle above the resistance. So my position exited and I'm fine. It's not a loss if your stop limit hits, right? What you're trying to do is get the best risk to reward ratio on a number of trades. And some of them are not going to pan out. Even if you're losing 5% on 6 out of 10 trades, but you're making, 10 to 20% on 4 out of the 10 trades, then your net gain is positive. Trading is a continuum. If your stop limit hits, don't fret and say, oh man, my stop limit hit. Why does this always happen to me? This is a market. It's not always going to react as you want it to, but as long as you keep recognizing positive risk to reward ratio plays and you don't stretch yourself out too thin, there is a high chance that your net gain is positive. So Waves definitely whiffed on it, but I don't regret the trade. It was a great trade, right? I mean, we followed all the rules, saw the bull flag formation, volume was coming in hot at the time. It broke above and closed above the resistance, but the pattern failed, and that happens sometimes. And we see that the declining volume and interest in waves is the reason that pattern failed. So not a big deal. All right, let's move on to an interesting story in cryptocurrency. So there is this exchange in Canada called Quadriga. It's Canada's largest crypto exchange, and the founder of Quadriga, a young guy, Gerald Cotton, was 30 years old, so rest his soul. But he died from complications of Crohn's disease. No, he wasn't killed off by the Chinese or the Russians or whatever, conspiracy theories are going on there. But yeah, he died of natural causes. The only weird thing is that he apparently had sole responsibility for handling the funds and the coins on this exchange, on Quadriga. So there's about $137 million US missing off of the exchange, and it is thought to be offline somewhere in cold storage. Now, this is the complete opposite notion of decentralization, right? Like, rest his soul, nothing against him. I'm not saying that, he committed anything nefarious, but you can't have the handling of these cryptos or any monetary system really be in the hands of one person. So if something happens to that person, as is the case here, then nobody has access to their funds. And that is the case right now. And his wife, or his widow now, says that she can't find the passwords anywhere. And apparently they hired a team of investigators to see if they can retrieve, anything, any sort of information that would, ensure that the depositors' funds are returned back to them, or at least they have access to the depositors' funds. All right, moving on to the traditional markets, and I might do these in a separate video. So I might be uploading 2 videos a day, one for the cryptocurrency market and one for the traditional markets. I've heard both ideas floated. I don't know where you guys stand in terms of a majority, like what the majority of you want, whether you want it condensed in one video or, 2 videos, one for each market. Let me know in the comment section below. I'll try to take the temperature of where you guys stand on this, but I don't really have a clear picture for how many of you prefer which option, right? So anyway, looking at the traditional markets, you'll see that the Dow Jones is up 160 points, about 2/3%. The S&P is up about 1/3%, and the Nasdaq is up about 2/3% as well. The interesting thing is the Dow Jones and the S&P, depending on whether you're measuring wicks or not, just escaped bear market territory. So the widely accepted definition of a bear market is, down 20% or more over an extended period of time, generally around 2 months or more. And, both the S&P and the Dow Jones were just shy of 20%. However, the Nasdaq was down, almost 24%, from its all-time highs that it saw back around August. We have now recovered from the bear market, at least for now, and we are trading above the 100-period moving average, the 100-day moving average, heading towards the 200, which is this green. And I'll be interested to see how it reacts to this 200. It was rejected twice at the 200 going back to November, and then again in December, and now we are in February. Approaching the 200-day moving average as well. So it'll be interesting to see what happens here. The S&P, I did enter a short on the S&P when it hit this resistance of this descending wedge. Obviously, this didn't play out because it did keep rising. But again, my trade was protected, my stop limit hit, and I'm fine. The S&P is approaching the 200-day moving average as well. Anyway, that is it for this video. Again, if you want access to the trade alerts, link is in the description. If you need help with your technical analysis or would like one-on-one FaceTime with me, that link is also in the description. Subscribe to the channel if you haven't already. Hit that notification. Leave a comment if you have a question or an agreement or disagreement. Stay safe out there. Peace.